Welcome to March, the season of have some great weather, because in 2 days you're going to die from frostbite. Unlike Mother Nature, here in March, the Real Report won't play games with your head. I'm Graham Allen, senior real estate broker with That Properties, and always, man, that over there is Amy Rakes, senior vice president of mortgage lending over at Proper Rate. Look, here's what we're going to do. We're going to give you a quick rundown of what the real estate market is looking like out here in the western suburbs, as well as kind of an idea of where interest rates have been, where they're at now, and maybe where they're headed. We'll find out. So last month, I stuck with my prediction of the first half of 2022 based on January and February stats. Well, mayhem kind of broke out overseas, and it's got me shiftier than Anna Delvey. Hopefully you guys get that joke.
Good reference.
Otherwise, it sucks. All right, but hopefully, Amy, you can help me kind of decipher which way is up and which way is down here in about 60 seconds.
I'd love to.
But first, let's check the stats. Homes for sale. Nope, not a damn thing good about this graph right here. Still down roughly 50% from our all-time low, same as last month. As I said before, this should start to pick up in the next 15 to 20 days. Couldn't be soon enough for you buyers out there that have been looking since last year.
Lots of buyers like, come on, sellers, get on the market already.
That's right. Market time still creeping up. I know everybody feels like every home sells within 2 days, but that's actually not true, right? Certain homes, certain price ranges, yes, they're going to sell faster, and they have been selling faster than any ever, whatever. So, but we are seeing a rise in time for these kind of upper level echelon homes, kind of things over 500,000, kind of getting up to that 700,000, and then definitely higher. So those buyers are being a little more cautious with their dinero. So overall average is creeping back up. I expect this to level off as kind of more inventory comes on and buyers start jumping on all the levels. Rewind about 30 seconds to find out when that is. All right. And finally, sales price. I want you to look at something. Come in close. Come in real close. Okay. Look at that slight little turn at the bottom, right? We're leveling off, people. All right, when I said last month, don't look for those prices to be in the negative percentages much longer, this is what I was talking about. We're right on track. That was our bottom, hopefully. All right, now we should see this line start to trend upward by the end of the next month, and then follow the same path as previous years, but still peaking around June. And now I have jaundice, all right? Love my camera. All right, so here's where I tell you exactly what all these numbers mean for your home sale or purchase in the next 6 months. To be honest, Russia's invasion of Ukraine has me all messed up. So all I'm going to say right now is that inventory's coming, not back to normal, but it's definitely coming. And in the end, interest rates are really going to be what determine where the prices go this year. And Amy, you're the best person to help us kind of maybe predict where those are going.
I'll certainly try. And I think, Russia, Ukraine has all of us messed up in different ways, emotionally, financially, and certainly for those in the real estate and mortgage industry. We're going to continue to feel the impact, right? So last month we talked about how quickly interest rates had really kind of skyrocketed so far this year. Well, then flash forward a couple of weeks, Russia invades Ukraine, and we had what's called a flight to safety, or many investors putting their money in bonds where it's safe. And that often happens in times of absolute uncertainty, which we're once again living through these lovely unprecedented times. But what that means is more money was funneling into bonds, which helps bring interest rates lower. So for about a week and a half, we actually saw a nice dip where we were more in the 3.75, 3.825 range for 30-year fixed rates. It's also yo-yoed back up to well over 4%. So what's the name of the game? Volatility. And you know why? Because no one knows exactly how they want to proceed with all this craziness going on. And ultimately, we still have roaring hot inflation. There'll be another inflation report coming out later this week. So we'll see how that may shake up rates further. But you can't get away from the fact that we are at 40-year highs for inflation. So things like the war can help give us these short drops. And that's great. And the key here is, and I want you to listen closely, if you're thinking about buying a property in the next couple of months, and you're watching these rates yo-yo and increase, and you're like biting your nails wondering what's going to happen, I have good news for you. I can actually lock in your mortgage interest rate right now without having a property under contract.
Boom.
And boom. I realize if you're not in the business, you don't understand that, that is a huge deal. What that means is we can protect you from these interest rates increasing. And even better news, if once you go under contract, rates are lower, we can revisit that at that time. So it's really kind of like a bulletproof vest heading into war. Do what you can to protect yourself and be ready in this market. So where will rates be when we talk again in 30 days? Honestly, we've got a Fed meeting come up. We're going to do another video about that. But as the Russia-Ukraine story continues to evolve and we keep seeing details about inflationary type reports, oil skyrocketing, the cost of goods is really significantly higher. That's really going to continue to play a really big part in what we're seeing for mortgage rates. So I would generally say expect them to be higher than 4%.
I think that's a safe bet. Amy, as you said, we are going to jump off of here, and then in a week or so, we're going to give you guys kind of an idea of how kind of we can see the outlook of, or how we can kind of predict where interest rates go, or what you kind of watch to see kind of how those things go up and down, and whether that's the Fed or whether that's stocks, bonds, things like that. So we're going to give you guys kind of an information.
Yeah, and the tip will be more than just call Amy, I promise.
That's right.
Although you can save yourself the hassle.
Never hurts. All right, guys, that's a wrap. We'll see you in April, where hopefully we see a much more subdued situation overseas, leading to kind of a more predictable real estate market for the second and third quarter. So until then, be good to each other.